Hello, everyone, and welcome to the NinjaTrader Ecosystem webinar room. My name is Juanita Archuleta, and I work in the NinjaTrader Denver office. We have a very special event for you today with Kris Lassen of LizardIndicators. I would like to mention that it is important to understand that there are substantial risks in trading commodity futures contracts and Forex. You should carefully consider whether such trading is suitable for you and will depend on your specific circumstances and financial resources. It is possible to lose all funds deposited with your broker and could even incur losses beyond these amounts. Please inquire at the following link for a full copy of the CFTC risk disclosure or if you have any additional questions. Also, please remember these training webinars are not a solicitation nor a recommendation, but simply educational in nature. This presentation is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Any brokerage-related questions should go directly to our brokerage using the phone number I just placed in the room or a simple email with the email address I just provided in the room as well. With new tools added nearly every day, NinjaTrader Ecosystem is home to hundreds of apps and services. You can quickly and easily find tools or services you're looking for with a simple keyword search. You'll also find information about upcoming webinars in an on-demand video archive to review previous event recordings. Also, if you are active with NinjaTrader and on social media, we would definitely suggest that you follow us on Twitter and Facebook to get live updates every day for all things related to the NinjaTrader ecosystem. NinjaTrader is always free for advanced charting, strategy backtesting, and trade simulation. To ensure you are on the latest version of NinjaTrader and to pick up a free live data trial, please use the following link. If you are interested in purchasing NinjaTrader or leasing NinjaTrader, we'd suggest you follow that link. And if you are getting started with NinjaTrader, we offer free live training on a daily basis. You can view a schedule of weekly webinars at the following link. We're excited for this unique event in which Kris will explore chart patterns that reflect an emotional response of traders and discover why you may want to focus on reversal patterns specifically. Thank you again for your attendance, and without further ado, it is my pleasure to welcome to the NinjaTrader Ecosystem webinar room, Kris. Go ahead and take it away, Kris.
Hello from Berlin, Germany, everyone. Good to be back in the room and glad to see that so many of you could make it here today. Many familiar names, but also quite a few new ones. So for new acquaintances, let me just do a quick meet and greet here. We're a team of two at LizardIndicators. Myself, Kris Lassen, and Harry, also known as Fat Tails, the market lizard himself. His indicators are some of the most downloaded for the NinjaTrader platform. And they're open source indicators available from our library. That's our baseline offering. You can access close to 150 indicators there for a very modest one-time registration fee. Then we also have a indicator spotlight newsletter that you can subscribe to free of charge, published on a not so regular basis since COVID-19. We've seen a pretty steep increase in support requests, I guess, since everyone is working from home and have more time to ask trader-related questions. But hopefully we'll get back to publishing that on a more regular basis from next year on. So if you haven't already, go ahead and sign up for that. You get a free download from the library with each newsletter and information on how to use it in a trading scenario. And then finally, we have our premium suite. This is where you'll find our professional tools. We'll talk about some of them here today. Among others, our flagship tool for entry timing, the auction bars. They can help you identify chart patterns that reveal trader psychology. So in the first part of the presentation, we'll talk about what these patterns look like and why we focus on reversals specifically. And then in the second part, we'll review when and where it makes sense to consider reversal setups. A lot of this boils down to whether institutional traders are likely to participate. Obviously, you're more likely to see a significant price move if the big players are in on it. So I think we all agree that there are logical as well as psychological aspects to trading and investing. The logical part involves locating commonly known and accepted points of reference, can be widely used moving averages, prior high, low, and close levels, and in extension there are Fibonacci retracements, extensions, pivot support resistance, or as we will see here today, prior VWAP levels. So I put up the lighthouse as an analogy because these reference points are used to navigate the markets. So in a sense, we're looking to establish self-fulfilling prophecy where a critical mass of traders will respond to the same price levels at the same time. But then there is also this psychological aspect. It's one thing to read about something or to watch a video or a webinar or even to sim trade a particular setup. It's something entirely different to keep your cool when hard-earned money is on the line. And that comes down to how our brains are wired. There's a number of interconnections between the three main brain components and situations when they influence one another. So here we have the oldest brain, the lizard brain or the reptilian brain, controls basic body functions, heart rates, body temperature, blood pressure, breathing balance, but it also responds to stress situations. So it's supposed to keep us safe from danger, at least in prehistoric times. And that's what's often referred to as the survival instinct, so the fight or flight reaction. And when responding to stress situation, there are adrenal glands that secrete cortisol. That's a hormone that the body makes, activating neurotransmitters. And then that in turn can trigger dopamine imbalances and unwanted reward mechanism in the mammalian brain. And that in turn can impact your ability to make rational decisions, which is the neocortex here, decision making and rational thinking. And this probably sounds quite complicated, but I think this should ring a bell for a lot of you. Interaction between primal instincts and our reward system on full display here leaves the rational thinking parts of our brain pretty useless. So that has to be dealt with, of course, on a personal level. But instead of only looking at it as a problem, you can also use it to find chart patterns that may forecast future price movements. Basically, we're looking for setups indicating that rational thinking has gone AWOL. Some participants might find themselves backed into a corner where they have to take action. And the spike pattern is an example of that. It highlights an extreme move within a short time span, rejection at a certain level, and then a pushback to where the candle opened. So a bullish spike is going to have a long lower shadow, much longer than the candle body and the upper shadow. And conversely, for the bearish, long upper shadow, longer than the candle body and the lower shadow. So what these patterns show us is that price was pushed too far in one direction, creating an imbalance. And there is a old Japanese proverb to describe what comes next. A spike that sticks out is very likely to get hit by a hammer. So in other words, because these candles are fairly easy to spot, there's a good chance then that more than a few traders will notice and adding fuel to the counter move. So here we have a 15-minute chart of the Nasdaq futures contract. And what the auction bars indicator will do is to isolate reversal patterns following sudden shifts in value. That's what these horizontal lines are, highlighting value areas called auction ranges. Here we have a 4-hour time frame for the auction range and a bearish spike forming at the higher end of the range. There is a extreme move within a short time span here, and then price rejection with a pushback to where the candle opened. So oftentimes this means that somebody got trapped on the wrong side of a trade. Somebody might have thought it was a good idea to scalp resistance at the prior range high, but then the market made a clear break to the upside here instead, and the obvious was ignored for too long. It's going to come around, just hang in there type of thinking, but then it just got worse until they were forced out here, either by a margin call or the thought of what the wife would say when reviewing account statements. Okay, so once all the buyers disappeared up here, new sudden shift in value with the raise to the bottom, breaking through the lower end of the 4-hour range here. Again, we see an extreme price move to the bottom here with short time span, price rejection at the new low, and then a pushback to where the candle opened. Again, this indicates exhaustion. The market just ran out of sellers here. But price rejection does not have to occur within a single bar, as we see with the spikes here. You can also identify key reversal patterns. They're not as easy to spot. We're looking at the high, low, and the close of the current bar, comparing it to the previous. And with the auction bars, we have basically 3 key reversal types, A, B, and C. And this here is a type C reversal. So you have a higher high and then a close below the low of the prior bar. And for the bullish scenario, a lower low and then a close above the prior bar high. So the type C pattern is the strictest reversal definition. You have the option, of course, to modify that with the type A. That only requires a close to be above or below the previous close. You always have to have a lower low or a higher high for the reversals, and then you can modify with these 3 different reversal pattern definitions that we have in the auction bars. But let's just continue with the type C pattern here. And this is a 5-minute chart of the NASDAQ and a higher time frame or auction range based on a 60-minute time series. Generally, you want to use a multiple of 10 to 20 of your 10 to 20 times of your primary bars for the higher time frame. And these reversal patterns are filtered by the auction ranges. So either they need to plot at the range itself, outside as in this case. You can also allow them to plot at the mid-range. Here we see a new high set and then a steep price rejection with a close below the prior bar low here, and then testing the new range low here, setting new lows for a couple of these bars, and then eventually a close above the high of the prior bar while rejecting this low here. Buyers jumping in to take advantage of this here. And so to sum up the reversal pattern section here, they show us that price was pushed too far in one direction and that the imbalance created a counter move. And yeah, if the pattern is obvious enough, a number of traders will jump on the opportunity and give further fuel to the fire, so to speak. So now we're going to transition into the second part of the presentation, which is on aligning these setups with the large players. Implicitly, we know that more money traded means more market impact. That's just a basic law of supply and demand. You can think of it as the capital democracy of the market. There's one vote per contract, not one vote per trader. And so if you look at it from a large trader's point of view, the main challenge is to avoid front running and keeping execution costs in check. And so they basically try to hide in plain sight when entering. They're looking for plenty of supply and demand, and that's where the volume weighted average price, the VWAP, comes in. Statistically, 70% of all transactions will occur within one standard deviation from the VWAP. And to give you some background info on why institutional traders pay so much attention to that, the VWAP and the standard deviation bands, they're objective, so they're the same on all charts and all timeframes, and therefore also used in institutional performance reviews. And so some of these bonus payouts that we hear about are linked to where the trades executed relative to the VWAP. And so there's a very real incentive related to tracking this in the big leagues. So this is what it looks like, daily VWAP on a 15-minute chart, NASDAQ futures contract. So we're looking here at the volume-weighted arithmetical mean of all transactions that take place during the session. So prices for every transactions are added and divided by the total contracts traded during that time. And we have an anchor point at the start of the full session. We see a blue stapled VWAP here when prices are moving above. So that's a trend indication. Then we have the value area that I mentioned, the upper and lower first standard deviations. And you'll also see that the VWAP is speeding up here during high volume, and it's slowing down during low volume, so dynamically accounting for market participation and putting a greater emphasis on the higher volume candles here relative to the day's total. So in an uptrend, once prices move towards the outer standard deviation bands, institutional traders will take a step back and wait for the market to return to value. So the idea is to look for reversal patterns in this area that align with the general trend. And so that is basically your quick start guide on how to use the VWAP. And coming up here, we'll have a look at how to determine where the market is trading relative to the prior day value and how that can be used for support resistance. First, some of the best short-term setups are found when prices have moved out of the previous day value area. So that is the area between yesterday's upper and lower standard deviation. So we see the session break here, and the lower first standard deviation ended up here. The VWAP ended up here, and the upper first standard deviation ended up here. And so we've drawn this in here as a value area. And we see the market opened below the prior value area, low, testing that in the overnight session before breaking the resistance here at the European Open. Same story around the prior day VWAP, moving into the US pre-session at the open of the regular session, breaking that level, eventually reaching and breaking out of the value area high from yesterday and returning to that level for support at the end of the session. Here we moved in on a 5-minute chart, adding the auction bars to show how a bullish reversal align with VWAP value and market structure. So in this case, it's configured for a continuation setup following a period of consolidation here. So with the auction bars, you can filter reversal patterns to plot in the direction of the current swing trend. In this case, a higher low. Of course, you also have the higher time frame auction ranges at play here. So those require bullish reversals to plot here at the lower range. I've included this picture here to illustrate the point or elaborate a little bit on it, because I think there's just too much effort into going into picking tops and bottoms. Basically, if a car pulls over here, it's much more likely to continue its journey at some point than doing a U-turn and going the opposite direction. So the best reversal setups will align with the overall trend following a period of consolidation, as we just saw. So we'll have a look at that in a couple of additional examples coming up here with higher time frame VWAPs. With our VWAP suite, you also have the weekly, monthly, quarterly, and annual VWAPs. They will have anchor points at each session start. So start of the week, start of the month, start of the quarter, or start of the year, just as with the daily VWAP. But we also have a rolling VWAP that creates continuous VWAP calculation. And that is very useful, as there are some limitations to being anchored at the session start. Here we have a 60-minute chart, and the weekly VWAP is anchored at the start of the week. So on Mondays, the current weekly VWAP will be the same as the daily VWAP for a Monday. And so readings of the weekly VWAP can, at the earliest, start somewhere midway through the Tuesday session. And that is a limitation of all anchored VWAPs. They have to put on enough weight in order to make useful readings. Applies to all of them: daily, weekly, monthly, and monthly. And so if you're looking to make a weekly VWAP reading on Mondays and Tuesdays, the rolling VWAP comes in real handy. This is a moving window, so not anchored at the beginning of the session, but taking data from the prior week and moving it forwards. So here we have a 5-day rolling VWAP, and it's again on the 60-minute chart. You see there's a sharp move on Monday, Tuesday, and that actually occurred in the value area for this calculation. Also, we see a support reaction here at the first test of the rolling 5-day VWAP, and then a retest at resistance following the break below here. We can further illustrate the limitation of the anchored approach by combining the weekly VWAP and a auction bar setup here. We've zoomed in on the Monday, Tuesday session in a 15-minute chart here. Bearish reversal setup in a 4-hour auction range, the mid band you see here. But unfortunately well outside the value area. Looks quite oversold in this from this perspective. And then I've put in the prior week's VWAP and value areas, and we see a clear bounce off here, the prior value area high for the weekly here, and also the VWAP of 3 weeks ago here. And there is also support at the prior week VWAP. So these are not coincidences. The VWAP is a objective price mark, widely known and accepted, and in particular popular among traders that bring some clout to the table. So if you look at the same scenario here with the rolling VWAP, we can have kept on the historic or the prior week VWAP readings here to understand what's going on in the larger picture. And as you see, the reversal pattern here now plots right at the rolling VWAP resistance, well within weekly value, of course. And I've added some racing stripes here. They come from a tool that's made by LizardIndicators, Bloodhound. I'll have some follow-up materials to this webinar. Basically, with Bloodhound, you can test and validate your own strategies and ideas. And so the follow-up here will be a more hands-on, practical format on setting up a strategy using this concept here. Okay, so bullish scenario here. This is a 120-minute chart of the Nasdaq. The VWAP is anchored at the start of the month. We have a bullish reversal again at the mid-edge, mid-range of a daily auction range. Nice run up to the second standard deviation here. But again, the limitation is that we're still in the first week of the monthly session here. So basically it's the same as the weekly VWAP during the first week of the month. And if you're looking at the monthly VWAP, that can start at the earliest from the second week on. And if you look closely at this, this is actually outside value here. So if you have a system requirement stating that price has to be within monthly value when this confirms, this would not trigger as a valid trade setup. You see the same structure here, again with the value reading from the prior session. We see clear resistance here at the value area low, so the lower first standard deviation from the prior month. There is resistance at the prior month VWAP, as well as here as the value area high. I'm breaking out of that and then coming back here. There's reaction at the supports, both of these levels here. So that brings us back to the lighthouse analogy. These are reference points used to navigate the markets. So you don't want to open a position that goes against a major support resistance level. Here, it's better to use them as profit targets, to put it that way. Again, the same scenario in a with a rolling VWAP. So we have 21 days here, and that's referring to the average number of trading days in a month. Again, a moving window, so not anchored at the beginning of the month, but taking data from the prior month and moving it forwards. And so you have a reliable value reading at the beginning of the month, and see that the confirmation here actually plots within value here. And so if that was a system requirement, you would be able to take this inside out setup. So we call these inside out trades when you go from inside value towards the outer standard deviations. You can also consider reversal patterns at the outer standard deviation. Those would be counter trend going from outside in towards value. And just to conclude the overview of the session VWAP package here, we have a yearly VWAP displayed on a 1440 minute bars. So that's equivalent to a daily bar. You can't use daily bars on a VWAP because they do not contain the data necessary to make the calculation. And so here we have anchor point at the beginning of the year, Again, the same indicator structure here, value area high, value area low, and we also have the value, the VWAP readings from prior years. And interestingly, the COVID pandemic was just returned here to last year's value area low and the VWAP from 2 years ago. So that puts things a little bit in perspective. I think that was the main part on how to use reversal patterns with institutional VWAP bias. I know it's been a lot of information to take in, but if there's one final point I would like to call your attention to, especially if you're trading Forex and crypto instruments. They're not traded on a centrally located exchange. So volume data is either unavailable or does not correctly represent the underlying markets. So you should not be using conventional VWAPs for those instruments. But fortunately, volatility is roughly proportional to the square root of volume. And so you can approximate a conventional VWAP. The squared ranges are used as the weighing factor, and the resulting range weighted average price and standard deviation bands can be applied just as the conventional VWAPs for Forex and crypto instruments. So with our package, you have access to these RWAP calculations, basically the same as the standard VWAPs. So you have daily, weekly, monthly, and monthly to make the quarterly and annual or biannual or bi-monthly, and the rolling RVAP calculation as well. Before we wrap up, just a quick recap of what we went over. First, looked at the chart patterns that indicate an irrational or psychological response among traders, and how to use those to identify setups around commonly known and accepted price reference points. Institutional traders are likely to participate from within VWAP value because that is where the majority of the transactions occur. Again, one of their main concerns is not to move prices as they enter the market, and by executing within the first standard deviation, they will have plenty of supply and demand and avoid front running, and also keep a positive outlook here when it comes to the bonus payouts. Okay, so with that, we've reached the end of the info section of our presentation here today. So I'm going to segue into the special offer we've prepared for this. Includes the VWAP package and the auction bars. We've put in the library membership here as well. As I said, the auction bars is one of our flagships for entry timing, so you won't find that anywhere else. The VWAPs, we're well aware that there are alternatives available out there, but our USP or unique solution is these prior VWAP value readings that we looked at, as well as the rolling VWAP calculation and the range weighted average price for instruments that may not have reliable volume information. So the list price for this is just south of $800, and at $645 you get the membership pretty much free of charge here today. Also, just like to mention that all of our products are one-offs. There are no recurring payments or charge for future upgrades. So we have many early adapters that are happy to have purchased these tools on NinjaTrader 7. Of course, if you remember, we'll have a special offer for you as well. You already get a discount on the premium tools, but for special events, we add a extra discount. So log into the member section, navigate to the premium suite, and check that out. Okay, so this is where you go to register for the promotion. lizardindicators.com/event. And so with that, I will wrap up today's presentation. We'll leave the bundle up until the end of the week. So go ahead and check that out. I've actually chosen a picture of my favorite skiing mountain as a background image for the offer page. So if nothing else, swing by to see if you can recognize where that is from. Okay, so with that, I'm going to hand it back over to my host here today, Juanita, if you're there.
Hey, Kris, I'm here.
Yeah.
Okay. Did you want to take any questions today, or you wanted to go ahead and close out?
Yeah, no, I'm. It's it's getting pretty late here in Berlin, but let me check here in the chat box to see if there are some questions here.
Okay, just let me know when you're ready to close out the room, and then I can.
Yeah, sounds good. Thanks. Thank you. So there is a question from. It looks like there was something with the sound, but I guess that that got taken care of. I hope you guys were able to hear me, anyways. So there is a question if the tools work with Renko bars. Yes, they do work with the Renko bars. Depends a little bit on which Renko bars that you're using. We've had some presentations on backtesting with Renko bars, and we've actually developed our own Renko bars, the Lizard Renkos. So you might want to have a look at those. It's not a requirement for using the auction bars or the VWAPs, but you definitely want to make sure that you have Renko bars that display accurate price levels. So maybe sign up for a trial of the Lizard Renkos and try them with the auction bars and the VWAP. On the VWAP, can I move the anchor start? No, it's not a point and click VWAP, and this comes back to the lighthouse analogy. So the idea here is to move with the price levels and calculations that a majority of the market participants will use. And so we've opted to use a regular trading hours anchor point. You can also have a custom anchor point within the session, the daily session, or you have it at the full session, but it's not a point and click VWAP. So VWAP stands for volume weighted average price. Was a question on that. So is there a reason for VWAP changes and colors on different charts? It's just to make it a little bit easier to read, to know that you're looking at a weekly versus a monthly. And you can, of course, customize the colors as you please. Then there's a question if you could use the long-term VWAPs for intraday scalping. Well, you should definitely be aware of the support resistance levels that I pointed out, and make sure that you're aligning with those when you're taking positions. But it's more of getting a overview of where you are in the market and understand what the institutional bias is for the higher time frames. Okay, so this will be a replay of this. I think that was answered as well earlier. You can, this is for Casey, shorter term day trading reversal indicators. You can use the auction bars for short term. The 5-minute bars that I showed are basically for that, but you just have to keep in mind that the shorter your time frame, the more likely you are to be in a noise scenario. So that's a challenge, being profitable over time with that. one thing you can do is to try to align, for example, a 15-minute reversal candle with a shorter. So you see that you have a reversal in the 15-minute. Those are quite reliable reversals. And then align the shorter term perspective with that. A lot of times this is also about risk. Of course, the risk for a 15-minute candle will be higher than, for example, a 5-minute. This is a question from Albert, if it works with NinjaTrader 7. Yes, we have these for NinjaTrader 7 as well. The auction bars as well as the session VWAPs were released for NinjaTrader 7, and then we upgraded them and improved them for NinjaTrader 8. So I definitely recommend that you move to NinjaTrader 8 at some point, because not only did our indicators improve greatly, but the platform delivered by NinjaTrader also is much better at NinjaTrader 8 than it was for NinjaTrader 7. Okay, so I think that will conclude my presentation for today. Appreciate you swinging by. If you have any additional questions for me, I realize that I didn't get to answer all of them, but feel free to reach out via the contact form over at LizardIndicators.com. Otherwise, you can also drop me a line at info@LizardIndicators.com. So thanks a lot for checking in. I hope it was of value to you, and I look forward to seeing you in the membership section sometime soon. Kris Lassen signing off from Berlin. Thanks a lot. Bye-bye.
I would like to give a special thank you to Kris Lassen of Lizard Indicators for a great presentation. Everyone in attendance here today will receive an on-demand recording of today's event, so please keep an eye out for that email. NinjaTrader Ecosystem is pleased to sponsor these weekly vendor events as a value-added service for our clients. If you find value in these events, we hope that you'll attend them on a regular basis. We would like to remind you the information shared in this event was provided of Lizard Indicators and not of NinjaTraders. All information was for educational purposes and should not be construed as trading advice. Again, we appreciate the time you spend with us. Enjoy the rest of your day, and we hope to see everyone in future webinars. Thank you and happy trading from everyone here at the NinjaTrader ecosystem.